Good morning, traders. I'm Jill Malandrino, global markets reporter at Nasdaq, and the sell and buy side have some changes coming to 2018 in terms of how they will be doing business. Mike, it sounds like things are really we're going to start off 2018 with a bang, and it's really primarily due to MiFID and MiFID 2. So what are those, and what are some of the changes that are coming?
Yeah, sure. Thanks, Jill, for having us today. Really what the MiFID 2 is generally speaking more transparency in the EU financial markets. It's going to impact every country in Europe, primarily around the asset management industry. And what we do as a firm is we work on both sides of the market, the buy side and the sell side. And specifically, we're kind of helping people focus on particular parts of the regulation, mostly around research on bundling. Right. And I think research on bundling is going to have a big impact. And I think that's where you're going to see a lot of kind of the concerns that are going forward. And generally speaking, what research on bundling means is you're really kind of having the asset manager separate their trading decisions from their research decisions, right? And what the regulators kind of saw and what they were asking really to do was saying, hey, we don't want to see research be an inducement to trading, right? So kind of going forward, that's no longer going to be allowed. If you're an asset manager and you're governed by MiFID 2, you have to explicitly pay for research, and you have to prove that that's kind of separated from your trading activity.
So this isn't just exclusively a sell-side problem, because being a former sell-side, we kind of get beat up a little bit when it comes to paying for access, paying for trading. So it doesn't sound like it's just going to be sell-side scrambling.
No. And as you know, I mean, there's no such thing that impacts one half of the market and the other half isn't impacted. So a lot of the regulation is aimed at the buy side. So basically, and that's going to have a knock-on effect to the sell side, of course. But basically, if you're on the buy side, you're an asset manager, you're going to have to kind of prove that you source, that you value, and you pay for your research in an auditable, kind of independent manner. Right, and you're going to really have to, again, separate out how you're actually paying for your research and ensure that that's not tied to how you're actually kind of executing your trades.
Is that going to impact the research landscape at all?
It will. I mean, it'll impact it in a number of different ways. I mean, I'd say the first thing, again, is this whole unbundling of the commission, right, the transparency between trading and research. The other thing is there's going to be a new payment mechanism put in place. People have used the CSA in the past. It's called a commission sharing agreement. That's moving to the RPA, a research payment account. I mean, generally speaking, the way they both work is that as you trade, certain aspect of the trade, it goes towards the execution, and the other part goes into kind of a bank account, and that bank account builds up, and you use that to pay for your research services. Right. In the CSA world, that was owned by the actual broker. They had a CSA account. So you might have 7 or 8 CSA accounts. In the RPA, that's all swept into a central account. And again, having that kind of view that if you separate the money from the actual broker, you're making more of an independent choice in how you're kind of paying those things out.
So it makes it more accountable as well.
It does. And what you're seeing too, and this is not something that most people are doing, but some people are moving to P&L. So the difference between CSA and RPA, you're still paying for research services with commissions. If you move the P&L, you're all of a sudden paying for those services out of your actual P&L itself.
What do you think some of the challenges are going to be at the onset?
Well, I really think what you're going to see in the beginning is people have to kind of set these budgets going into 2018 if you're on the buy side, right? So you have to determine like which research services and which products I actually need for my investment process. So you have to figure out what that is going into the year. So you really have to collect a lot of data, right? You have to analyze what research you've used in the past, what services you've used in the past. So it's collecting all this information from your actual counterparts, analyzing it, and going forward into 2018 saying, okay, here's what we need to kind of conduct business. On the sell side, you have your kind of counterparts asking for all this data so they can analyze the services. So you're having to kind of provide that information yourself.
Right. So typically using research as a way to get the buy side to trade with you, that's going to change a little bit.
It is, because in theory, that's the inducement. You're not allowed to just put research out there. You have to have a relationship. So what everyone's doing right now is putting their agreements in place. So like, who's an official partner? Who do I have an agreement with that I can provide research services to? And if you don't have an agreement to provide research services to, you no longer can kind of use that research as a way to kind of have trading kind of relationships kind of on the back of that.
Do you think eventually this is going to play out to be a good thing for the industry?
I do actually. If you really look at what's being asked, on the buy side, you're actually being asked to put more insight into your research kind of process, right? That's going to be a positive thing, right? Many of the things that are being asked in MiFID 2 are things that firms have been doing for years and best practices. It's not going to be regulated. I think that could actually lead to better performance. If you look at the sell side, what they're going to do is get a lot of implicit feedback on where they're adding value. You know, which services they're adding that actually they're valued by their customers a lot. So if you actually have the buy side having a more insightful research process, and you have the sell side having more focus on what they actually do best, I think at the end of the day, the investor is going to win with better returns.
All right. Well, thank you very much, Mike, for joining us. And traders, as always, thank you for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.